Welcome to Subramani. I'm planning to do something like some important lessons in equity which I learned personally and some of the mistakes which I made. So first is to know when is a company out of favor temporarily in the market, and sometimes when the company is completely finished and it's not worth buying. There is no value buying or anything like Dewan Housing. Dewan Housing share prices fell, and I was tempted because I thought the promoters were not too bad. They were trying to solve the problem, they were trying to repay the money, but then suddenly, this is a very long, I could do a full episode on what went wrong with Dewan Housing. It's not only the promoter to be blamed, right? Of course, promoter is to be blamed, but many things went wrong, and when he was trying to solve the problem, I was not sure whether he will be able to solve the problem. So sometimes you enter and you exit, right? The other share which I exited because they got into a temporary problem is Tata Power. Tata Power, I exited in 200 or 200 plus, and then I saw the share price fall all the way down to 80 and stay there for a very long period of time. So at 80 I was tempted. I thought I could buy more, but it just was not moving. There was just no technical support, and then the company got removed from some indices, which gave an opportunity for many people to do a short sale and take the price to 30. I really don't know who did it, but 30 was a fantastic opportunity to buy, so I bought. And then I held on till it reached a price of 260, simply because it went up just too fast. So here, what are the lessons to be learned in Tata Power? First of all, Tata Power made a big blunder in Mundra. The way they quoted the price, with their input cost went up, and they just could not make money in Mundra, and that pulled the company down. If it was anybody other than Tata Power, that share price would have been 8 rupees. Here the group was holding on, the credit rating was good because of the Tata Sons backing, and they could get money at a reasonably good rate. But even now, I do think that the Tata Power balance sheet has too much of debt. So they will, of course, they will improve. But the Mundra problem getting solved, and it was a great opportunity to buy, and that is why the share price went up from 30 to 260. That was a fantastic price for me to get out. I got out some partially, and I'm still holding on because when I was buying at 30 rupees, for me it was a 5% dividend yield. Another company which is, say, Suzlon, similar kind of business. I have met the promoter, Tulsi Tanti, very nice person, and I realized that he made a mistake. I would call it a blunder. When he went to Germany, and German rules changed after he bought a company. That was really unfortunate. So again, that was a temporary thing, but that company had no ability to handle such a big mistake. It did not have the backing of a Tata Sons to it, and I'm sure Mr. Tulsi Tanti died a sad man. But today, maybe if somebody else can take it and run it, the share could be good. So at 104, Suzlon was definitely a worth sell. But at 8 rupees, my belief in Suzlon was, it can't go too wrong, right? Something will happen, somebody will buy it, and I still waited. I think I got it at 5 rupees or 4 rupees or something, and today it is at 20 rupees. Am I recommending it? No. But I'm just saying, there has been a change of management, something could happen. I think the Sanghvis of Sun Pharma have put in some money, maybe somebody else will take over, something like that could happen. So to know the distinction between this is temporary and this is permanent is not going to be very easy. In case of Dewan Housing, it was permanent. So if you did not buy Dewan Housing at 220, but you bought it at 120 thinking it's not a bad buy, you would have still lost money. Same thing for Yes Bank. If you bought it at 200 or 300 and then kept averaging, you would have been taken to the cleaners. But Yes Bank was not too bad at 12 rupees, because if that is the price at which HDFC and SBI could buy, I thought it couldn't be too bad a price. So I was about to buy, and then I found I got it cheaper than even 12. It priced it below that. So right now it is at 17, 18 rupees, whatever, 16, 17, 18. Am I saying it's a great buy? I have no clue. But to me, I can take a chance. Same thing with Indigo. Again, COVID was temporary, right? But COVID gave you an opportunity to buy that share at 800 rupees, and I thought, which was my initial cost, I had bought it at 800, then I watched it go to 1200, then I watched it come back to 800. So I kept buying at various prices. So I have some shares now at a average price much less than today's price, but I may still be a buyer, but I do not know. That's what I'm saying. Some temporary opportunities, and to make that distinction between was it temporary or was it permanent is not something easy, not something all of us do, and not something which all of us always do right. Also, I realized that normally the thing is to say, how is this product? Will I use it? Will my friends use it? And therefore, it's a good buy. That is one way to look at it. The other way to look at it is to say, is this a good product? Is this something which the next generation will use? Considering that India's 80-90% of the population is below the age of 30, finding out whether they will use. For example, if I have to invest in a gaming company, it's not a question of whether 60-year-olds are playing games, right? The question is, are 22-year-olds using those games? Are they playing it? Is it easy? Does it make money for the company? Those are the questions to ask. So the questions also keep changing with the economy. So, the willingness to change, willingness to see how the change is going to impact that company in which you are investing. That's very important, instead of just sticking and saying, oh, I will be stubborn, I think people will continue to buy shampoos and toothpaste. Of course, people will continue to buy shampoos and toothpaste, but realize that last 5 years, P&G and Gillette have not done as well as Colgate. So are people brushing their teeth but not shaving? Well, I don't know. Virat Kohli is the way to look at it. Then yes, maybe people are not shaving. But Gillette has not done well. Colgate has done well. So knowing which one to bet is not going to be very easy. I had money in Gillette as much as, in fact, I had much more money in Colgate. That's because historically I have got Colgate. But Gillette is a later purchase. I mean, Gillette may be 20 years old and this may be 40 years old, but it is there, right? And also one more thing I find is the ability to be miserable after making some decisions. You buy some share and that the share price goes down. I bought Care at maybe 500 or 470 or something like that, and then I saw it go down. Something, managing director has resigned, this has happened, there is no business at all. And I kept looking at the cash flow which was available in the balance sheet and saying, why is the price falling? But I have no clue, but the price fell. So temporarily there will be some misery in some of the shares that you buy, and eventually it might double. So if you had bought Care at 420 or 415 and you watched it go to 340, the call is, should you sell it at 340 or should you buy more? In my case, I did buy more because I just couldn't understand why people would be selling it at that price. And today when the price is 800, you feel your stand is vindicated, saying, oh, this was not a bad decision. But that time it looks bad and people say, oh, Care does not have a business the way CRISIL has. They have no business idea. They do only rating. To me, they do only rating was a compliment rather than a problem. So I bought, I waited, and I made money, right? But sometimes you buy and then the share price falls. Patanjali, I thought was a good buy at 1300 or even 1400, but then the price fell. Thanks to the Hindenburg report, the price fell, and I actually went and bought more. I did not sell in panic, I went and bought more. Similarly, Ambuja Cement, you got a chance to buy more. So knowing which is temporary, which is permanent, which is a good promoter, worth staying, it's very difficult. So sometimes you buy, you sell, you just get out and say, I don't want to be invested in this group, right? Sometimes you say no, because everybody has a negative perception of this group, it's a good buy. Right? For example, you speak about Patanjali, people say, oh, that is yogi and this and that and etc. Excellent, great reason to buy. I am not recommending the share at this price, but I am saying I could buy it at 840 or 850 simply because of the Hindenburg report, and people said, oh, Hindenburg must be coming out of the report on Patanjali. I have no clue why the price fell, but yes, there was chance for you to, it's very important that you will get miserable, you will find it very difficult, you will find contrarian views in the market, you will have people saying why did you buy this, there are better things to buy, right? And also I realized when I was buying Zomato and Indigo airline, is that people tell you, oh, the numbers are not adding up, the return on capital is not there, it is a loss making company, etc., etc. You have to know that when you are buying, everything is not maths, nor is everything psychology. So if you think that everything is psychology, you're wrong, and if you think everything is math, again you're wrong, right? So understand that line between taking a call just based on numbers and taking a call on a startup. The indicators are very different. However, if Indigo does not get good return on capital employed, then would it be worth deploying your own money in a share like that? Search me, I don't know, but I will have to wait for it to build good market share, profitability, maybe start flying on foreign routes, and then see how the performance is. Once that happens, then it will have to be decided on merit and not just on the basis of gut feeling. All the companies of which I have spoken of, I have in my portfolio. Some may have sold, I may have bought, I may be trading, I may be investing, whatever. So you have to assume that I am trying to talk up the share so that I can sell. Well, I don't know, I am not a seller in any of these shares unless it flies off the handle. But it's important for you to know that all these shares are there somewhere in my portfolio, whether it is Tata Power or Suzlon or HDFC Bank, any of the shares which I mentioned, they should be there in my portfolio. Thank you.